Hello, my name is Steve Bigelow with the Candlestick Forum. We're going to concentrate on this quick video on people asking, could we have identified when GameStop was breaking out? And the answer is yes. Very simply, we had people in the options room take advantage of the fry pan bottom breakout. And then we can utilize the RARE program, research analysis, reverse engineering. So market direction on February 1st started out today with a bullish harami in the Dow, with stochastics getting toward the oversold area. Also, it looks like there's kind of a support level down here. So this will be very important to see how they open this market tomorrow. With the positive trading will tell us if the selling has stopped. Now we see if they bounce it back up to the T-line. This is a reversal signal potential. On the other hand, the NASDAQ traded up strong. It didn't do a reversal signal, but it did close above the T-line. So this still implies that we're not in a strong reversal yet, but at least maybe the selling has stopped. So we're going to use the what we call the RARE program, research analysis, reverse engineering. And as you can see, we could identify in other patterns the fry pan bottom in Sunworks. And this is exactly how we utilize the RARE program. When it breaks out, we want to see why it broke out. Now, this happens to be in a very strong sector, the electric vehicle sector. Just a very simple analysis. Did they announce something that told us there was now a new dynamic coming out of a fry pan bottom? This type of pattern tells us that something's building up in investor sentiment. When they break out through this level, you can see the type of percent moves, because the Japanese race traders expect a price move coming out of a fry pan bottom, a very strong price move. So this is what we call reverse engineering. When we see this breakout, we can also add our double doji analysis. It broke out, consolidation, but what was the one factor that adds to the probabilities of being in a good trade on positive trading? The fact that they haven't been able to close it below the T-line. So a lot of people ask, well, do you use candlesticks going into earnings? And the answer is, it's just common sense analysis. If they're ready to report earnings, we started recommending this stock because of the breakout, consolidation, started trading positive on Friday, gapped up today, and going into the close, they were trading back up toward the top end of the trading range. What's this tell you? The people that are expecting earnings or the results of earnings, that know probably what's going on in the company, are likely to be buying going into the close. Now, had this closed down here doing a doji, you may have closed out the position because it told you there wasn't very much confidence going into the earnings report. They were buying going into the close, coming out of a pattern, and after hours, it's trading up in this range. This is not anything magical. This is just putting common sense into the analysis of what happens with human nature in trading vehicles. So we also recommended Workhorse today because it broke out with your best friend signal. And what do we expect from that type of influence of investor sentiment? A 45-degree. And that makes it very simple for staying in this position. How long do you stay in this position? As long as you don't see a sell signal and a close below the T-line. All this is based upon investor sentiment that works the same way time after time. So right now, expect some more upside. Maybe not a powerful move, but a bounce. This allows you to be more established back into some long positions that have closed back up above the T-line. Join us this week. We are going to be showing how you can identify which breakout patterns put you in the strongest positions with the high probability potential that not only are you in an uptrend, but you could possibly be in a huge uptrend like we saw in GameStop and some of these other stocks. That'll be it. We'll see you in the chat rooms.